Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market balanced within a range and then broke to the downside, and the sellers were overall much more dominant in the overnight session. Heading into the open, our short-term bias is neutral. We're open to continued balancing within a range, and we're also going to be watching the real-time momentum situation and the real-time internals to see which side continues to be more active and more dominant after the open. If we continue to hold below 60.75 to 61.75 or even 65.75, then that would tell us that the sellers are still fairly active. A breakout above 60.75 to 61.75 and through the 65.75 level would be a bullish signal, and in that case, we could take out the 69.5 to 71.5 to the upside and go back up towards 75.5 and the 78 to 80.5 resistance, which marks yesterday's highs. So at this point, the question we are going to be trying to answer is whether that larger time frame bullish bias is really going to assert itself on the smaller time frames. If it is, then we should be able to take out the 60.75 to 61.75 area. That'll be the first signal that buyers are really stepping back in, and failure to do so means we have to be a little more cautious on the long side. On the downside, the main area of support is 51 quarter to 53.75 and the 46.48. Now, ideally, if the buyers are going to continue to be dominant, we hold above the 51 quarter to 53.75, and a high momentum break even below the initial support zone would be a pretty big warning sign for buyers, and in that case, sellers could start to press. A break below 46 to 48 would serve as a confirmation that the sell side is now dominant and in control on the smaller time frames, and it would also mark a break below yesterday's range. Now, in order to really put in a proper breakdown below initial support and below 46 to 48, we are going to want to see broad market weakness, sustained downside momentum, and the other markets participating in the move, mainly the Russell, because Nasdaq is already relatively weak compared to the S&P and the Russell. So ideally, if we are going to get a proper breakdown even on the day time frame, even if it's just a morning downside move, we'd want to see the Russell participating as well. But right now the markets are a little bit more decoupled, at least in terms of Nasdaq and looking at the other market. So I think we're just going to keep the focus primarily on the S&P and not really put too much weight on the other markets. But typically, in order to get a sustained directional move, you'd want to see the other markets participating in that directional move. So on the downside, if we do get a break below 51 quarter to 53.75 and 46.48, then it does call for caution at the immediate zones right below. So at 39 quarter to 41 quarter, we'd have to be careful. Below that, we have the 35 high volume node, an area where buyers could start to step in. And then we run into better areas of support down at 25.5 to 27.5, and especially at 20 to 22 and the 18 quarter support. So if the market heads all the way down there, then at that point, it's a bit overdone on the day time frame, and we can expect responsive buyers to jump back in, and that larger time frame bullish bias, of course, is going to help with that idea as well. So right now, heading into the open, we just have to maintain a very neutral and flexible mindset, and understand that the larger time frame bias is still bullish, but on the smaller time frames, the market can really head in either direction here, and we're seeing a bit of a narrowing of the range, and we're seeing a little bit of contraction taking place. So whichever way we get that directional break, it can lead to some follow through, at least on the smaller time frames. So if we start taking off to the upside, then there is potential to test the 78 to 80 half area. If we start breaking out to the upside and we start taking out the pre-market resistance zones and then break out above the initial resistance zone, then we could be headed right back up. Beyond that, 83 to 85 marks the all-time high, and after that, there is no hard resistance. So right now, again, the short-term bias on the day is neutral. The larger time frame bias continues to be bullish, and we're just going to be watching to see which side really presses because it is a higher volume, higher momentum market. Lastly, today is a bank holiday, so the banks are closed, and that could result in a little bit less volume. Now, given that we're in a very high volume environment right now anyway, it means that we can still get decent movement on the day time frame. It may not be as good as it was yesterday, but we could still get decent movement even if the volume does taper off a little bit. So the better opportunities are probably going to be in the first 3 hours of the open here. And then because it's a bank holiday and we're heading into the weekend, things could slow down a bit. So just something to keep in mind. So those are the main ideas heading into the open. Let's see how ES responds to 60.75 to 61.75. I think that's really going to be a little resistance area that's going to help establish the short-term directional bias, and we'll take it from there.